set, go.
This one's recording, right?
Yeah.
What's going on, everyone? This is RFBM, Raising the Financial Bar with Mar. What's going on, everyone? This is the RFBM Podcast, Raising the Financial Bar with Mar. Welcome to RFBM once again. This is the first episode of forthcoming projects, and here I have my guest, my cousin Josh.
Hello, everyone. I'm Josh. I'm not that special. I'm just kin to Shamar. But thank you for having me today.
Nah, this is special. This is the first episode. So the reason why I started this episode off with my cousin is because he's the reason why I got first started into stocks and investing. So he's going to tell his personal story of when he first started and some of the obstacles that he get through. Well, just overall, this is overall experience. And so, Josh, you want to start it off with maybe a little background before you go, or you just want to get right into it?
We could just get right into it. So, Shamar has me on this show specifically today to talk about one experience I've had with a particular company, Shopify, actually, ticker symbol SHOP. I originally bought my first share in this company. I'm looking at my Robinhood account right now.
Yeah, go ahead.
I also use Robinhood as a brokerage account. I bought SHOP for $98.53 June 7th, 2017. Depending on when this episode's air, that's actually about 3 years ago. And I didn't really know much about the stock market then. I was just buying and selling, and actually sold this share. This one single share for $90.25. So I actually lost several dollars on this one particular stock. And ever since then, it looked like the stock has just been raging.
Shopify does look like it's been up.
If you look at the company for the past 5 years, it has went up 2,542.13%. That's, if I'm not mistaken, that's almost unheard of for just any company. It's in the realm of your likes of Apple, Microsoft, Google, Facebook, and yeah, so it's just a company I wish I would have held on to it. I mean, I learned from my mistakes. I definitely have to, if I can enter back into this company sooner or later, I would love to, but it's definitely out of my price range now.
Okay,
but, yeah.
So just a little background to elaborate further on that. Tell them, just for people that don't really know about stocks and investing, just give them a little couple of basics.
The first brokerage account I started with was Robinhood. I believe it's a platform that's geared towards millennials. Just the simplicity, the interface, the way everything's set up, and of course, what really broke them, that really sets them apart from the rest, is that they were the first ones to start off with commission-free trades. Whereas you didn't have to spend $5 to initiate a buy into a certain company. So they really set the trend with that. And now you see a lot of these larger companies that have
Followed right after.
Yeah, like your Fidelities, also use them. Your Charles Schwab, your TD Ameritrades, your E-Trade, Scott's Trade, RIP. But yeah, so I use Robinhood. Been using it now actively, I'd say, for the past 2 years, and it does well. But I feel like I've gotten to a point where I want something that could give me a bit more analysis, or it can help me understand stocks a little bit more. So that's why I'm kind of transitioning to or utilizing a different brokerage account. So I'm still gonna use both of them, but Robinhood, I definitely say it's geared toward a millennial investor, and I have no problems with it. I know I believe it was last year, like it was the beginning of this year, 2020, Robinhood was facing some outages, and it wasn't looking pretty. I know a lot of people lost money. Some people, they couldn't get in on positions they wanted to in certain companies, but just like anything else, everything make mistakes, even computers.
So what you're saying is people were unable to get into their account.
No, they were able to get into their accounts, but they just weren't able to make trades. Like they couldn't buy into certain companies. Like you would submit a purchase order, but your purchase order, it would say it went through, but it didn't go through. Or people would have there would be what is it called? Like their puts and what else is it? I can't think of it. I can't think of it. What is it called? Options. People have options that they couldn't even option trade, so a lot of people lost money. But I recommend Robinhood for any entry level trader. It's a great platform to start on. It has all the fundamentals. It's really just to the point. You could almost say it's almost like the Apple for trading platforms. It's to the point. It's right there. Everything's in your face. You don't have to go look here for that. Unlike I would say the other brokerages are almost like Androids. So there's a little bit more flexibilities when it comes to using those platforms.
Okay, so when it comes to Robinhood, who would you say has the more similar? You could make a similar comparison to in regards to Robinhood.
Like what brokerage?
Yeah.
I don't think I'm at liberty to say that. I haven't really experienced with other brokerages. Like I said, I recently just started up with Fidelity. If you want to say, I guess Fidelity could be the same as Robinhood because they both have the color greens on their interfaces. So, but for a similar UI, I don't see any company that's comparable to Robinhood.
Yeah. Okay, so for somebody that's never invested. Now, disclaimer here, we're not financial advisors, nor are we licensed in anything of that nature. But for somebody from your perspective and based on your personal experiences, what's something you would tell somebody that's just getting started into investing?
First thing I'll tell them, make sure you have no problem losing money because you will lose money. You can say, oh, I'm going to be up by such and such percentage, but you will lose money. So you have to be comfortable with losing. Secondly, I wouldn't necessarily say don't invest in companies you don't know about, but do a little research at least. Like see who's a CEO of a certain company, see what strides they have taken to be part of trends that are going on in the world today. See what they do with their money as far as R&D, research and development. Are they putting money back into the company or are they just lining their pockets? And don't. Finally, I would say don't be emotional. And this just ties back to rule number 1. You're going to lose money.
Okay, and so just to elaborate further on that, when you said you have to be able to understand that you're going to lose money at some point, what would you say to people that have debts? Would you advise them to avoid investing until they've handled them, or is there a certain threshold that they have to reach before they get into that?
I can't advise anybody anything, but I would say pay your debts off before you invest money, because it would be worse if you lost money and now you still have this debt to pay with money that you lost. So pay your debts off first. You don't want to owe anybody money ever. So that should be a rule before you come into stocks, because there are people who do options trading and that can get a little bit tricky. I can't really elaborate on them much, but you don't want to owe anybody money.
Okay, so as far as investors, what are some investors that you have become familiar with?
Over the past 2 years, I've become familiar with several. Of course, probably the most notable one, Warren Buffett, and probably his most notable book, The Snowball Effect. But Warren Buffett, his approach to investing is solely based off of value. Invest in companies that you understand, basically how they make money, what they do with their profits, and where do they see themselves in the coming years. You can't go wrong with that approach. You just buy. His approach seems to be more so to just buy and hold really good, solid companies. I know recently he was in the news for selling his airline stakes, and he owns several airline portions in several airlines. And what people, I guess, were up in arms about with him selling his stake in airlines is that what they don't understand is this is his. I believe it was his third time betting on the airline industry, and every time it seems to just fail for him. Even actually, I'm not gonna mention I'm not gonna say what I was about to say actually. Now let me keep going. Okay. So, but Warren Buffett, one of his idols that he looked up to is a gentleman named Benjamin Graham, which is he's considered probably the father of value investing. He wrote a book on it, which I'm currently reading. It's called The Intelligent Investor. It's basically, the book really touches on psychology and how it ties into the stock market, just not getting your emotions tied into it and buying and holding. But Warren Buffett, he actually he went to school, I believe it was in New York, and he studied under Benjamin Graham and also worked for him, if I'm not mistaken. But don't fact check me, don't quote me on any of this, but he has ties to Benjamin Graham. Another investor I look up to, or not necessarily look up to, but I'm familiar with, is Charlie Munger, which is Buffett's right-hand man. Bill Gates, which is another one of Buffett's right-hand man. So I guess you could just call it the Buffett clan. I'm really into the Buffett clan. And there are other investors too. This gentleman by the name of Ray Dalio, he likes to say cash is trash. But what I don't think people also understand is I think he understands how powerful the black dollar is. And you see him trying to be cool with Diddy as of late. They have their little segments on Diddy's platform. But he's another investor. He's done really well over the years.
Okay, as far as investing books, yeah, I see you mentioned one earlier. What's a couple other investment books you've read or you plan to read?
So hopefully I could finish The Intelligent Investor within the next 3 months. I was supposed to finish it the month of February. That didn't happen, but we're here now, so I'm going to try and finish that. I would like to read The Snowball Effect by Warren Buffett. And there's several others. I can't remember their names, but I'd like to do some more reading on stock investing.
All right, so that concludes the podcast, RFBM, Raising the Financial Bar with Mar. I hope you enjoyed this. I enjoyed talking with my cousin and learning some things.
Thanks for having me on the show today, Shamar. I'm looking forward to being a part of this. Many more shows in the future. If you ever want me to come on, drop my 2 cents, I'm sure somebody would want to hear it. So I'm looking forward to this. I think it's a great opportunity to enlighten some folks.
Yeah, man. Just want to keep on promoting this, pushing this. RFBM, it's going to be on many mediums, through the podcast, through YouTube, and through all social media. And yeah, I really appreciate it, cuz.
I'm always willing. I'm sure I have something that somebody's willing to listen to. And anybody has something to say, just drop it in the comments below.
Our own mind has to be changed. We have to change our mind about ourselves.
Instead of me fulfilling my prophecy, I have to start. Instead of me, doing a good job and carrying on the empire, I have to build. And that's a hell of a job for a 21-year-old. You know what I'm saying? That's a hell of a job for any youngster, male or female, to have to build the empire. Because this world is such a gimme. Everybody back off. Everybody's like taught that from school.
I don't come to bow, I come to conquer.